fear plus action equals growth, right? It's a new process. Embrace the fear, take the action, and over time, the fear will drop down and then the growth will start to happen. When you do commercial mortgage lending for investors, we don't need your personal income, right? We're going to assess each property individually. Rates will be higher for, say, rehab loans, shorter term loans, but for the DSCR 30-year fix, it might be competitive or it might be even lower sometimes. It's not going to be always the case where conventional loan would be better than a DSCR loan because there's all the other factors that play a part into the equation. What's your strategy for this particular property? Type of investment do you want to do? And then why do you want to do it? How long do you plan to keep it as a rental? Because that way, when we put that long-term debt, we put the right type of long-term debt on the property. What are their strategy for a particular piece of property or their portfolio so that we have the right loan structures to match their strategy? Be ready to solve the problem, right? So if the problem is funding, say, how do I get more funding? Because you say, I don't have the money, you just stop, right? But that's the reality, right?
Right,
you say,
that's why I hear it.
I get the money, just that quick change keeps you thinking about how do I solve the problem?
Okay, and there's one other loan product I wanted you to touch on, the DSCR loan, as far as contrast with conventional loans. A lot of my clients that get started with conventional loan in their name and they put 20% down for a single family. But now it seems like it's more popular for investors are using these DSCR loans. Could you speak a little bit about that loan product?
Yeah, as I mentioned, the long-term money, that's more the DSCR loan.
Okay.
And the reason why, when you do commercial mortgage lending for investors, we don't need your personal income, right? We're going to assess each property individually. So for example, if they want to do a DSCR loan, a debt service coverage loan, we're going to ask what's the property address, what's your purchase price, what are the current or estimated rents, what are the taxes, what are the insurance. And we'll use those numbers to help qualify you for the loan, independent of your personal income. So, we're not worried about your DTI and any of your previous purchases. So from that perspective, it's hyper focus on that particular property and the numbers to that property to determine the loan structure. So from that perspective, and also, like I said, it's also gonna be like a 30-year fixed, right? So very similar to a conventional loan, but without the different caveats of looking at your income.
It's a little higher rate, though, just to throw that out there.
Well, I don't know per se if it's a higher rate because it might be competitive or might be even slightly lower than potentially a conventional loan. But I'm not pricing the conventional loans out side by side to tell you one way or the other. But I don't necessarily say that the rates will be high. The rates will be higher for, say, rehab loans, shorter term loans. But for the DSCR 30-year fix, it might be competitive or it might be even lower sometimes.
I guess it's like you look holistically. I guess you're saying the cost versus just like the pure rate per, because usually the rate's like by credit score, right? For both of those products.
So when it comes to DSCR, you have your experience, you have the credit score, and the amount of leverage you're taking to on the loan, right? Are you doing 20% down versus 40% down? So all that plays a factor. And I can say the reason why I say it might not necessarily be low because I've had clients who went to a traditional bank, tried to do a conventional loan, and then switched to me because they, after the fact, and my rate came in lower than the rate quoted from the bank. And for that particular client, the credit score was great. They did a larger down payment. And so it's not going to be always the case where conventional loans be better than a DSCR loan because there's all the other factors that play a part into the equation.
And I just wondered if there's something that you wish more of your clients told you up front so that you could really help them scale. What are some things that you wish they would have told you up front, but they just didn't know?
So, my initial conversation with any client, if they don't tell me I'm going to ask a certain question, I'm going to say, what's your strategy for this particular property? Type of investment do you want to do? And then why do you want to do it? And so I typically ask those questions anyway, just to get an idea. If they're purchasing the property 123 Main Street, for example, right? And, I'll ask them, yes, you are doing the BRRRR strategy. We're going to rehab it and keep it as a rental. I'll also ask them, how long do you plan to keep it as a rental? Because that way, when we put that long-term debt, we put the right type of long-term debt on the property. So let me give you an example. I had a client that was doing a long-term DSCR loan, and they planned to sell the property within 2 years. That's their, or maybe 3 years, for 2 or 3 years, right? So from that scenario, knowing their strategy, instead of a traditional 30-year fixed DSCR loan, we did a 30-year interest only loan, which increased their cash flow. And then because they planned on selling it within 5 years, it worked for their particular strategy. So I do ask my clients, what are their strategy for a particular piece of property or their portfolio, so that we have the right loan structures to match their strategy.
Right. Now, and I can say I've witnessed it because I had a consultation with you. You did ask that question, but I could recall, meeting with other clients, and then, here's the pre-approval, or, here's the term sheet. And I asked them, ask the lender that you put in this much of rehab? Oh, no, I didn't tell them about that. I just said I need a piece of paper that said I could borrow $300,000. I think you need to call him back and tell him what you're trying to do. So that's why I wanted to kind of make that point of, because I think sometimes people feel like I'm going to tell the lender, especially a new relationship, what they need to know to get this deal right in front of them done, but they miss out on the opportunity to kind of build a relationship where they can actually grow if they just had a broader conversation with people like you.
Yep, agreed.
So, Owen, I appreciate your time. Is there any last, I guess, pieces of wisdom that you would give to newer investor who really wants to scale and not kind of get stuck, not feeling like they are not able to continue to fund the deals that they see in front of them?
So I guess a couple things. Be ready to solve the problem, right? So if the problem is funding, say, how do I get more funding? Just make sure we have the right mindset of how we are asking ourselves questions. Because you say, I don't have the money, you just stop, right? But that's the reality, right? But if you
Right. That's
say,
why I hear it.
I get the money, just that quick
Mm,
change keeps you thinking about, how do I solve the problem? So
mm.
I'll tell investors, ask yourself, how do I get better? Ask the questions and be ready to solve the problem. Also, say to investors, my quote is, fear plus action equals growth, right? It's a new process. Embrace the fear, take the action, and over time, the fear will drop down, and then the growth will start to happen.
So, do you think rates are going to drop further this year?
That's what the
Your prediction.
my prediction is that. Well, I'm gonna say a disclaimer. I'm like all my disclaimers. I'm not an attorney, accountant, or I can't predict the future. However, I do anticipate in the future that there's a stronger chance of rates dropping. Probably not a big drop, but at least a slight drop. But of course, they're always reevaluating the data. I would say I don't think the rates are going. I think that the worst case scenario, I think they're going to stay steady, and then over time they may dip. So from that perspective, I think for now we might be at the potential peak of where the rates are, as far as so if the current numbers work, the guidance, I'll say, okay, it's going to stay the same or go down. That's my prediction.